Market sell-off. Sunday night slump in stocks and crypto. Good evening. It's a risk-off start of the week. U.S. stock futures are slipping and crypto markets are tumbling in Sunday night trading. At this hour, Dow, S&P 500, and Nasdaq futures are down roughly 0.4% to 0.7%, while Bitcoin is off about 5% and Ethereum nearly 7% from yesterday's levels. What's driving this market pullback? In short, investors are de-risking amid macro uncertainty and year-end jitters, and an unwinding of leverage bets is hitting crypto especially hard. Let's unpack the factors behind tonight's market downer. Finance.yahoo.com, TradingView.com. Show more lines equities. Caution after a big rally in the stock market. The mild slide in futures looks like a bout of profit-taking and caution after last week's big rally. Remember, U.S. equities surged in the Thanksgiving shortened week. The S&P 500 jumped plus 3.7% and the Nasdaq nearly plus 5%, one of the best holiday week performances in years. That rebound was driven by hopes the Federal Reserve might cut interest rates in December, with futures markets putting the odds of a December rate cut at over 85%. Finance.yahoo.com. Now, as we turn the page to December, traders are tapping the brakes. Stocks have run up fast, and valuations, especially in tech, are stretched after months of gains. The Nasdaq just ended November with a slight loss, down 1.5%, after an early month tumble, a sign that investors were getting nervous about an AI stock bubble and started trimming exposure. With Fed policy uncertainty still in play, President Donald Trump hinted on Sunday that he's chosen a new Fed chair for next year. The market is in wait-and-see mode. Even if the Fed sends dovish signals, a leadership change injects a bit of uncertainty. Economicd, Times.com, Finance.yahoo.com. On top of that, year-end portfolio rebalancing is kicking in. After such a strong rebound, some funds and traders are likely locking in profits and reducing risk as the calendar turns. It's common for large investors to trim overheated positions and even do some tax loss selling in late Q4. This doesn't reflect a panic about fundamentals so much as tactical positioning. In fact, there's no single bombshell news event today, no earnings shock, no new geopolitical crisis behind the slide. Instead, it's a general risk-off mood, the feeling that it might be prudent to take some chips off the table after a volatile November. Economicd, Times.com, EquityRam-Academy.com, EquityRam-Academy.com. Macro forces are also tempering enthusiasm. Economic data has been mixed lately. For example, last week's U.S. jobs report came in with conflicting signals, strong parts and weak parts, and core inflation remains sticky, keeping the Fed's next moves uncertain. Overseas, China's latest factory readings came in weak. An official survey out Sunday showed China's manufacturing activity contracted for an 8th straight month in November. That underlines persistent concerns about global growth. None of these developments individually spell disaster, but in a market that just sprinted higher, even neutral or mildly negative news can trigger a pullback as traders de-risk ahead of potential surprises. EquityRam-Academy.com. Bottom line for stocks. High hopes fueled a big rally, and now a bit of reality is setting in. Investors are cautiously dialing back risk to see if the Fed delivers that rate cut and whether the economy can support further gains. It's a healthy breather in an overextended market, rather than a sign of panic. Crypto. Leverage unwinds and fear fluids now, turning to crypto, where the sell-off is more severe. Bitcoin is trading around the mid-$86,000s, down roughly 4 to 5% in the past 24 hours, and Ethereum is near $2,840, down around 5 to 6%. Those are big one-day drops, but they cap an even rougher month. November has erased over $1 trillion in crypto market value. Bitcoin at $86,000 is more than 33% off its all-time high of $126K set in early October, officially back in bear market territory. What's behind this crypto swoon, and why tonight's especially sharp fall? TradingView.com, USAtoday.com. Just like stocks, crypto got very hot and is now cooling off. But crypto moves tend to be more violent. Over the past few weeks, we've seen a cascade of factors hit simultaneously, risk aversion in broader markets, technical sell triggers, and a purge of excess leverage. Importantly, there's no major new regulatory bombshell or corporate failure in crypto this weekend. Analysts note that this decline does not appear to be driven by negative fundamentals. There was no big news catalyst at all for today's drop. Instead, what we're seeing is largely a structural flush in the market. TradingView.com, late Sunday, during typically thin trading hours, a sudden wave of sell orders hit the crypto exchanges. Liquidity was low, many traders offline for the weekend. So even modest selling pushed prices down fast, which in turn triggered a chain reaction of automated liquidations. Within about an hour, nearly $400 million worth of leveraged long positions were forcibly liquidated as Bitcoin plunged. These forced sales, margin calls on overlevered bets, added even more sell pressure, knocking prices down further in a feedback loop. It's a textbook example of how high leverage plus thin liquidity can yield outsized moves. In fact, such weekend whipsaws have happened repeatedly this year during low liquidity periods like late Sunday. TradingView.com. Beyond the market mechanics, sentiment in crypto has flipped decidedly bearish this month. Earlier in the fall, enthusiasm was sky high. Bitcoin's rally was fueled by optimism around potential ETF approvals and the broader AI-driven risk-on mood. But now investors are in risk reduction mode across the board, and crypto, being one of the riskiest assets, is getting hit hardest. Cryptocurrencies often trade in line with high-growth tech stocks. When we see tech selling off on valuation or rate fears, Bitcoin and Ethereum often slide as well. This correlation has held true in November's downturn. Rising interest rates and a murky economic outlook have made cash and bonds more appealing. So some big players have been rotating out of crypto. Even corporate crypto treasuries and funds like BlackRock have reportedly moved money to the sidelines. USAtoday.com. Technical factors compounded the decline. Once Bitcoin broke below key support levels, around $106,000 a couple weeks ago, it triggered stop-loss selling and shook confidence. That initial break unleashed a frenzy of further selling. Analysts noted volume spiked, and even long-term holders started cutting exposure as the downtrend picked up. The result was one of the sharpest crypto corrections in years. Between mid-October and now, Bitcoin fell from $126,000 to $82,000 at one point, and altcoins crashed 20–30% plus across the board. Fear has overtaken greed. By late November, a popular crypto fear and greed index dropped to its lowest levels since the March 2020 crash. USAtoday.com. LinkedIn.com. To put it simply, crypto is experiencing an amplified version of the stock market's pullback. Macro uncertainty and a shift out of speculative bets set the stage. Then over-leverage turned a normal correction into a flash crash. The good news, if any experts don't see this as a permanent indictment of crypto's value. This is a violent but normal correction after months of euphoria, one analysis explained, akin to the market blowing off some steam. There's no systemic crisis or fundamental collapse evident. It's about prices overshooting and then abruptly adjusting. EquityRam-Academy.com. Looking ahead, so, where do we go from here? In the very near term, all eyes will be on whether this risk-off mood carries in a Monday's full trading session. Sometimes futures market dips don't fully materialize once New York opens. Fresh economic data, or buyers stepping in could change the tone. We'll be getting key U.S. reports in the coming days, like a delayed inflation reading and jobs data, that could sway Fed decisions. Any hint on the Fed's interest rate course, or clarity on the incoming Fed chair, could either calm or rattle markets further. Finance.yahoo.com. Finance.yahoo.com. For crypto, volatility may remain elevated in the days ahead. Weekend liquidity will improve as trading desks reopen, which could either help stabilize prices or, if sentiment stays sour, facilitate more orderly selling. Many analysts suggest the crypto market could find a floor once these forced liquidations subside and value buyers sense a bargain. Long-term bulls argue that flushouts like this reset the market, clearing excessive leverage and setting the stage for a healthier recovery. Of course, that's cold comfort to anyone caught on the wrong side of today's plunge. TradingView.com. In summary, Tonight's market slump appears to be a response to accumulated pressures rather than one new shock. Stock futures hint that investors are cautiously trimming risk, digesting a torrent of November news, from Fed signals to China's slowdown, and waiting for the next catalyst. Meanwhile, the crypto sell-off is more dramatic, fueled by the sector's inherent leverage and volatility. But it echoes the same theme. When uncertainty rises, even briefly, the most speculative assets take the biggest hit. This has been a fast-moving situation, and as always, markets can turn on a dime. Keep an eye on overnight developments and early morning headlines. By the time the opening bell rings Monday, we'll see whether cooler heads prevail or if this risk-off wave intensifies. For now, stay tuned and stay diversified. It's going to be an interesting start of the week in both Wall Street and crypto land.